Thank you, everybody, for joining us today. My name is Rob Cochran, and I'm going to be your presenter for today as we discuss the long-term care program that's available through your association. And just to tell you a little bit about it, we've entitled this A National Challenge, Long-Term Care Planning. And it is a national challenge. Many people have not addressed this issue yet and are not prepared for the kind of things they're going to experience in the future. So the purpose of our discussion today is to help you guys have a good understanding of long-term care protection, how it works, what's available through the association program, and really just help you kind of get a comfort level with some of the fundamental basic parts of this, and then we can go into more detail with each of you that are interested on an individual basis. As I said, my name is Rob Cochran. I am a long-term care insurance specialist, and I'm the lead long-term care representative for the association programs and have been with some of them for as much as 20 years. I have written 2 books on the subject of long-term care insurance. The first is entitled Pills and Bills, and the second one is called The Truth About Long-Term Care Insurance. And this is all I do is long-term care insurance. That's my area of expertise. So I'm happy to be on this discussion and present to you this afternoon. What we're going to talk about is, first of all, I want to tell you as far as asking questions, there's a toolbar on the right-hand side, and you can type in any questions that you have, and at the end of the presentation, I'll do my best to answer those that we can get through. And if there's some that we don't have time to get through, we'll certainly respond back to the individual with the answer to their question. So what we're going to talk about today as far as our agenda is information about what is long-term care. We're going to talk about that, define it and explain it, and how does long-term care protection protect somebody's retirement plan and their retirement assets. We're going to dispel a number of the more common myths that people mistakenly believe about this subject, and there are a lot of them, quite frankly. And we're going to present the member benefit long-term care plan and help you understand how that works. So what is long-term care? Well, it's basically the assistance that somebody needs with their activities of daily living. And the activities of daily living are things like bathing, dressing, toileting, transferring, which is moving around from a bed to a chair, continence, or eating. If somebody needs assistance with those things. And it can be caused, the need for that assistance can be caused either by a physical impairment, an illness or an accident, or just getting old, or if somebody has a cognitive impairment, so they can't be left alone, they need supervision. So either of these fall under the category of people needing assistance for long-term care, physical impairments or cognitive impairments. And this kind of care can take place in a variety of different settings. One place is in your own home. Now, most people, given their druthers, that's where they want to stay. They want to what we call age in place, right in the comfort of their own home. To do that, generally, that costs about $20 an hour for a home health aide to come in and help take care of you and help you do those activities of daily living, eating, bathing, dressing, toileting, and those things that we looked at. Now, a home health aide is the lowest level of care provider. It's not like an RN or someone that's costing, $50 an hour. This is a $20 an hour person just to help you do those basic activities of daily living. Assisted living facilities, they're going to run somewhere around $41,000 a year as the median average for assisted living facilities across the country. Could be more or less in your area. And nursing homes, the median average is about $73,000. And again, that's going to vary depending on where you live. So care can take place in all these different settings, and as you see, the cost for the care can be quite expensive. If somebody needed 8 hours a day of care at home, you can see they're talking about $160 a day to pay for that care at home. So again, a lot of people haven't planned for this, and what a lot of us have done is plan for our retirement by savings vehicles such as 401(k)(3)Bs or a 401k maybe at your firm, IRAs, other types of savings, and people invest in real estate, all planning to use those things for their retirement. The problem is, once long-term care is needed, when people have to start spending their own money from their retirement assets, it doesn't last very long for most people. The average American loses their entire life savings within 9 months. Now, hopefully, the folks that are on this call would be above that average. Many of you will be, but across the board, still, a lot of times people in a couple of years can go through their life savings. I was at a seminar yesterday where somebody was talking about a client of theirs that had $640,000 in retirement money, and now they are down to $40,000 because they have needed to pay for long-term care. So it can be a huge expense. And it's interesting, if we look at the other things that we protect ourselves against, we see some kind of interesting things that surface. The first thing is, if we look at our car, auto insurance, we're insured for that, and yet that's a moderate risk, but obviously it's very important to have insurance for that risk. If we look at our home, we're insured with that, with homeowners insurance, and yet that's a low risk, but very important. We wouldn't want our house to burn down and not have insurance on it. If we look at to the right side here, health insured, through health insurance, that's a very high risk, and we typically do transfer that. And of course now with some of the mandates, people have to have health insurance or pay a penalty. But look at long-term care. That is a high risk, like health insurance, but yet generally it is uninsured. Most people have not addressed this issue yet, and if something were to happen to them, they would be scrambling around trying to figure out, how do we pay for the cost of this care? So let's dispel some of the myths that come into play. The first one that you hear a lot is people think, well, I'm too young, this is for old people. I don't need to worry about this until I get old. Well, unfortunately, and a lot of people don't know this, but 40% of the people in this country who are currently needing help with long-term care services are working age, between the ages of 18 and 64. So this doesn't just happen to people that are in their 70s and 80s and beyond. Certainly the older we get, the more likely it is that we're going to need this kind of care, but a lot of it happens to younger working age people. Another one is people don't think it'll ever happen to them. They just feel like, you know what, I'm in good health, there's longevity in my family, I don't think that I need to be worried about this risk. Well, unfortunately, and I have to share this with people sometimes, the better health that you're in, actually the odds are probably greater that you will need this kind of care during your lifetime, because people who are frail and in much poorer health, they're going to get things that might take them out early, but people that are in great health can battle against those things and live for a long time, but just need assistance and care. And of course, what's happening is medical technology keeps improving, so they're keeping us alive longer, and we're also a lot of times taking better care of ourselves. So those two things combined can lead to a much greater need for long-term care protection down the road. And here's the kind of things that cause the need for care. When people think, well, I don't think it'll happen to me, they're not really thinking about all these types of situations that can occur. It can come from an accident, or it can come from a health condition. Well, on the accident side, we have things like auto and motorcycle accidents, people who are active that do things like skiing and riding horses and diving, extreme sports, a lot of different things that can happen as a result of that. When it comes to health conditions, obviously we're aware of a lot of these things that happen to people: strokes and heart attacks and cancer, diabetes, arthritis, osteoporosis, Alzheimer's and Parkinson's and MS, and just the basic aging process of just getting older and needing assistance. At some point, all of us are going, if we live long enough, are going to need assistance with these activities of daily living. We're just not going to be able to do them. I don't know if you've ever injured your back or not. I struggle with a bad back off and on, and when it's in that mode of acting up, it's impossible to bend over and tie your own shoelaces. So and when those things happen, you realize, wow, how vulnerable we are if something serious were to happen to us. Another myth that people believe is that, well, certainly my health insurance must cover it, or the government will pay for long-term care through programs like Medicare or Medicaid or things like that. But a lot of times people don't really understand how these programs work. So I want to talk to you a little bit about these types of other insurance programs that are out there. Before I get into that, though, I just want to remind you again that if you have any questions, just go to that right toolbar there on the right side, and you can type in your questions, and we'll try to get to those here before we finish. I definitely want to leave time to answer some questions. The gap in traditional health coverage. If somebody has health insurance, they might think mistakenly that long-term care is going to cover that, or that their health insurance is going to cover long-term care, but it really doesn't. Sometimes some plans might cover some skilled care for the first maybe 100 days, but after that, they're not going to cover it. And so that's not long-term care. That's actually very short-term care. For intermediate care, which is not as severe as skilled care, that might be covered for only maybe the first 60 days or so, or 40 days, not a very long period of time. And then for custodial care, which is the big issue, that's not covered at all. Well, that's the problem with long-term care. Of all the people that need long-term care services in our country, the vast majority, all they need is custodial care. And that is what's considered the help with those activities of daily living: eating, bathing, dressing, toileting. In other words, it's not a problem where medically you're going to improve, you're going to get better in most cases. It's going to be an ongoing type situation, and that's what we call custodial care. When it comes to Medicare, which is one of the major governmental programs that provides the health benefits for people over 65, a lot of times people think, well, Medicare certainly must cover long-term care. But really they don't. Their focus is on curing people, not caring for people. And so therefore they cover doctors and hospitals, and in some plans prescription medications, but not the care itself. Generally, if they're going to pay anything for the care itself, it's only for skilled care, and then for a very limited period of time, generally 100 days maximum, which is only 3 months roughly. So again, it's not long-term care. If we were only worried about 3 months, quite honestly, none of us would protect ourselves against long-term care. We wouldn't buy insurance. We'd say, we'll figure out a way to pay for it for 3 months. But it's the one that can go 3 years or 6 years or 10 years, or some studies said President Reagan needed care for 17 years for Alzheimer's. And that's been a real game changer in the long-term care world, is Alzheimer's and different types of cognitive impairment. Medicare also requires a 3-day hospital stay before you transfer into a facility in order for them to provide any benefits, and they want to see that your medical progress is continuing, that you're continuing to improve. If you reach a point where you're no longer improving, then Medicare basically stops paying benefits. Medicaid is a program for the poor, and it does pay for a good portion of the long-term care expenses for people once they've exhausted all of their own money, basically all their own money. They get to keep a little bit, but not much. And typically, you're in a nursing home, the one place that people don't want to go. So Medicaid basically pays for care in a nursing home versus home care or some of these nice assisted living facilities where people want to go. So the problem with Medicaid is you got to be poor to get it, either when you start, or unfortunately, a lot of people end up being poor because of a long-term care event, like the client that I was telling you about earlier that had $640,000 in assets. Now they're down to 40. Well, they're going to be on Medicaid pretty quickly. And the second problem is that you have to be basically willing to go to a nursing home, which is the one place that nobody ever wants to go to. Again, people want to stay at home as long as they can. And then if they have to go somewhere, they're a little more open to going to these nice assisted living facilities. But the nursing home's the last place that they want to go. The federal government, okay, are they likely to, liberalize Medicare and Medicaid and provide more benefits as we go forward, or less benefits? Well, we feel like they've really spoken to this point and showed their intent through the legislation that they have passed. The Health and Welfare Reform of 1996 gave incentives for people to take care of this responsibility themselves by purchasing insurance, and they made the premiums tax deductible in certain situations, and they also made the benefits tax-free. They ruled on that so that if you receive benefits from a tax-qualified long-term care insurance policy, the benefits are tax-free and you don't have to report them on your income tax return and pay taxes on it. The Deficit Reduction Act of 2005 increased the penalties and the restrictions for people who were trying to shelter assets or give assets away to a child or family member, but knowing those assets were really supposed to be used to pay for their care when they needed care. So the government spoke there. And then Class Act, that was a provision that was part of Obamacare originally, where they were going to try to provide some long-term care benefits for the working disabled, but that basically got shut down. They realized that was not feasible the way they were trying to do it and sustainable, and so that was actually pulled right at the beginning stages. So the government encourages us to take care of funding our own long-term care. And basically, for those of us that have been blessed to accumulate some assets, there's really only two ways to address this issue of long-term care. We can, well, there's three, and the third one's a hybrid of the first two. We can either pay for it ourselves out of our own money, and if somebody has a lot of assets, if they have maybe $3 or $4 million of fairly liquid assets, they probably could afford to pay for long-term care out of their pocket. Although I'll tell you, we have very few people that do that, because when they understand some of the insurance products that are designed for higher net worth people, they realize it doesn't make any sense to do that when this is a risk that has a 70% chance of occurring, and it does. 7 out of 10 of us who reach age 65 are going to need this kind of care. So we can either pay for it ourselves, or we can purchase some type of long-term care insurance and transfer this risk, a very big risk, to the insurance company. Or the third way is some combination of the two. And I will tell you, quite frankly, it usually ends up being a combination of the two, because most people don't need to buy 100% of the cost of care and buy an insurance policy to cover that. If they have some other assets, they can afford to self-insure part of that risk themselves. So they might transfer the lion's share of the risk per month to an insurance company, but then realize that I could handle $4,000 a month of additional cost out of my own assets or my retirement income to help keep the premium down. There's a number of different strategies and things we can do to try to keep the premiums down. Another myth people have is my disability insurance must cover this. Well, disability insurance doesn't cover long-term care. They're designed for two entirely separate things. The first thing is disability is designed to replace our income. So if you have disability insurance, it might replace a portion of your income, maybe 60% of your income. Well, you know, if you had to live off 60% of your income, that would probably be challenging, but you'd sure be glad and grateful you had the 60%. But what if you now had $40,000, $50,000, $60,000, $70,000 a year of additional expenses because you're needing care? You see the shortfall there. That's the problem, and it typically ends when you retire or when you leave a company if you have your benefits through work. Long-term care pays for that care, that $40,000, $50,000, $60,000, $70,000 a year in my example. Long-term care pays for that care that someone would need, and it continues throughout their lifetime. It doesn't stop when they retire. So both are very important. If you need your income from your job to survive, then you need to insure that with disability income, but you need long-term care insurance, most of us do, to cover the risk of the additional care that most all of us are going to need at some point during our lifetime. Another myth is people think, well, you know, I can wait till I'm older because I'm in good health. I can't tell you how many times I hear this, and I want to comment, you know, to people about it because it just doesn't make a whole lot of sense. But sometimes they'll say, well, my husband and I are in good health right now, so we don't really need to be worried about this. Well, that's the time you do have to be worried about it, because that's the only time you can get any type of insurance is when you're in good health. You can't tell you the phone calls that I get of people that call and say, you know what, I've got a problem now. I've had breast cancer or prostate cancer or got this going on. Can I purchase long-term care insurance? And at that point, it's too late. They can't purchase it. I had one person call me one time. They had just gotten back from the assisted living facility, the nursing home, I can't remember which, with a family member. And they said, my family member now needs care, and we've got to put them in a facility. And I was looking at these places, and they're expensive. And I realized that I could buy insurance to cover it for just a fraction of what that cost of care is. And that looks like a good deal, so I think I want to do that. And I said, well, unfortunately, you can't do it now because they're in need of care. So, you know, people, that's the risk if people wait until they get older. Number one, they're going to pay higher premiums because the premiums are lower when we're younger, like any type of insurance. We'll have to buy more coverage because the cost of care is going to be more expensive down the road. So we're buying more coverage at a higher premium, and we'll be paying future rates, which the premiums for long-term care on new policies have gone up over the years, not down. They've gone up a lot. And we may not qualify due to our health at that point in time, like the person that called me that I just referred to that wanted to buy coverage. Now they'd gone to the assisted living facility and nursing home and seen what the cost of care was going to be. And females may pay even more in the future because women live longer than men, typically by about 7 years, so the cost of long-term care insurance in most cases is going to be higher for women, and we may see that continue to trend that direction even more going forward. A lot of people say, well, I don't need to be worried about this because I'm not ever going to a nursing home. I've had people say, read my lips, I'm not going to a nursing home, I'm staying at home, or I'm going to, if I have to go anywhere, I'm going to an assisted living facility. Well, at the seminar that I was at yesterday, I heard an attorney say, if you go to any nursing home and you talk to any resident that's in there, every one of those residents said that same thing at one point in their life, and that's absolutely true, they did. But the other thing is most care doesn't happen in a nursing home. For every one person in a nursing home, there's about 6 being cared for at home or in the community. And this slide shows that 70% of the elderly, 78%, who need long-term care get that care from family members and friends. Now, unfortunately, a lot of times they're getting it from family members and friends because they don't have a plan in place. And that is a nightmare. I had a lady call me just yesterday that was saying, my sister has been caring for my mom. She's needed 24-hour care the last 7 years. I'm sorry, not 7 years, the last year, 12 months. And she said, my sister is still working full-time and taking care of my mom and not getting a whole lot of sleep. We have to have someone that we pay for that comes in during the day while my sister's gone to work. And she said the stress on my sister is about to kill her. And unfortunately, that's what happens over and over again that plays out throughout this country when people have not planned for this event. It falls on the family members, the loved ones, and it's a huge burden that even when they want to do it, and kids sometimes have the best of intentions, they say, oh, we're going to take care of you if you ever need care. A loving parent really doesn't want to put their children in that situation because people who've gone through this know that it is brutally difficult and it changes everybody's world. The one whose world it changes, sometimes the least, other than the health issue, is the one that's impaired and needs care. It's everybody else whose world gets turned completely upside down, trying to scramble around, take care of them, work shifts, take different shifts to take care of them. It's just a nightmare, and it becomes so much easier for people when they have professionals that they can have come in and do the heavy lifting and the hard work and that kind of thing. So it's very important that people plan for this event in advance before it happens. And what I want to do is I want to shift a little bit now and talk to you about some of the different ways that you can plan for long-term care. There's different types of insurance solutions that address this issue of long-term care. There's a couple of different ways to approach it, and we can get into this, and we'll get into this individually with each of you. At the end, there's going to be a website that we're going to have up on the screen, and you can go to that link. Actually, you have to type it in, but you can go to it, and if you'd like more information about your specific situation, we're going to have to get a few pieces of information from you about your health, and then we'll go out and research the marketplace, find out what carriers would be the best options and choices for your particular situation. We will do that for you at no obligation, no cost. That's a service we provide to the members. So for those of you who want to find out more, how it would affect you specifically and what different plans would look like, what they would cost, we'll do that individually with each of you. And I will assist those that are on this call myself with researching that and learning about it. But basically, there's two different types of long-term care protection. There's what's called traditional long-term care insurance, and then there's something called hybrid long-term care policies. Traditional long-term care policies have been around for, probably 30, 40 years, and they work very similarly to your other types of insurance that you would be familiar with, things like auto insurance, homeowners insurance, disability insurance, term life insurance, health insurance, things like that. And so how traditional long-term care works is you basically pay a premium, and if you need to have an event where you need a claim and submit a claim, then the insurance company will reimburse you for the cost of your care up to however much you purchased in your policy per month. So you might purchase $3,000 a month, $6,000 a month, Had a doctor recently want $10,000 a month. It just varies based on what you want and based on your budget and what you can comfortably afford. But the thing with traditional long-term care, and traditional long-term care works great, been around for a long time. A few things you need to know about it, though, is it doesn't build a value, so that if you never need it, sometimes people ask and say, well, if I never need it, do I get anything back from it? Do my estate or my heirs get anything back from it? And just like those other types of insurance that I mentioned, the answer would be no, you don't get anything back for traditional long-term care. People ask, well, if I want to cancel it and surrender it, do I get anything back if after 15 or 20 years I need to cancel it or want to cancel it? Maybe I've inherited a lot of money, I don't need it. And it's just like those other types of insurance, you wouldn't get anything back from them if you were to cancel those policies other than the unearned premium for that year. But if you paid it for 20 years, you don't get anything back for those payments. And that's fine. There's nothing wrong with that. That helps keep the cost of insurance down. The third thing is the premiums can increase with traditional long-term care insurance, but they can't single you out for an increase. So if they had to raise it for everybody in your state and they got insurance department approval, you could see your premiums increase on traditional long-term care like you see it on these other types of insurance, although the actuaries price the policies not to increase, but they have the right to go back and increase them if they have to, and they do it on a class basis. They just can't single you out. So again, and that's fine too, and all those things allow traditional long-term care insurance to be less expensive because of those features that I just mentioned. The hybrid policies, there are people that seem to be attracted to the hybrid plans, especially the higher net worth somebody is, the more attracted they are to a hybrid plan, because it kind of addresses those things that I just mentioned and detailed on traditional long-term care. It doesn't do that the same way, those things. For example, if you never need long-term care, it generally will pay a death benefit back to your heirs or your estate, whoever you've named. It'll pay a death benefit that a lot of times will be in excess of the premiums that you paid during your lifetime for that hybrid long-term care policy. So it's basically built on either a life insurance chassis or an annuity chassis, and it provides you long-term care benefits if you need long-term care. You can cover two people under the same policy, a husband and wife, or a parent and a child. In some cases you can do that if there's not more than a 25-year age difference between the two. And so it provides long-term care to you if you need long-term care to both people on the policy. But if you don't, it provides a death benefit when the person has passed away if they never needed care. If you needed some care, then it provides the benefits for care, and if it hasn't exceeded the total death benefit in the policy, the difference is paid to the beneficiaries. That's one thing. The second thing is it has a surrender value. So if in 20 years or 15 years or 10 years, whatever, somebody needed to cancel the policy, all the money they've spent for it is not gone. They're going to get a value back from the policy. And in some of the plans, it's actually a guarantee of at least 100%. I say at least 100% because it can grow with interest, but at least 100% of the money that has been paid into the plan. And the third thing is the premiums are guaranteed and they can never change. They can never go up. So there's some advantages and disadvantages, pros and cons with both different types, and we just have to, for each member, just educate them on both types, the pros and the cons, run numbers for them, see which companies are going to have the best value for them based on their health and their insurability, and then help the member look at those options, understand them, and then the member can choose what approach they think makes the most sense. And we do a lot of both those types. It just depends on what the preference is of the individual. So I just wanted to cover that, not to have you guys understand that completely in detail, because I went through it very quickly, and we go through that in a lot more detail when we're working with you individually one-on-one. But I wanted you to at least have an understanding, because a lot of people hear different things out there in the industry about different types of insurance or things that maybe have occurred in the industry in the past, and there's a lot of misinformation out there. And so it's our goal to make sure that the members have the right information and the current information based on where we are today. Okay. Okay, the next slide, talking about long-term care for members. What are some of the benefits? Well, there's discounted rates that are available with some of the carriers that we have. There's comprehensive coverage available. We have a number of carriers to choose from, and that's important because different carriers underwrite different medical conditions differently. So it's important that we go out and shop it with all the carriers to see who's going to be the most favorable for that particular member. If somebody has diabetes and they don't use insulin, they just take oral medications, well, certain companies might be more competitive. If another member has diabetes and uses insulin, well, different companies might be more competitive. So that's why we do this research on an individual basis for the members. The plans are fully portable. You can take them with you if you move from state to state. If you retire and you're no longer a member of your association, you can still keep your plan. The plans are tax qualified, which means the benefits are tax-free when you receive them. You don't have to pay taxes on them. As I've mentioned, you have the ability to work one-on-one with a long-term care specialist that's going to help you find the best plan for your particular situation. And spouses and extended family members are also eligible to take advantage of these programs. This is the contact website, or the link. If you were to type in this link, and you're also going to get an email after this presentation that will have this link in there that you can just click on the link, and it'll take you right to the form that you'll just answer a couple of questions for those of you who want to learn more about this as it pertains to your specific situation and what the options would be available to you to get educated about it. That's all you need to do is click on that link, complete that little form. I think it takes probably 2 or 3 minutes of that, and then that information will be forwarded to me, and then I will contact each of you individually and take you through the process of researching this and getting educated about it, so you can see, number one, are you eligible based on your current health? What type of plans are available, traditional long-term care, hybrid products, what's going to make the most sense for you, which you'll make that determination once you get informed and educated about the pros and cons of the different ways to approach the long-term care risk. Key thing is for people to put a plan in place so that they are protected if something were to happen to them, so it doesn't be as disruptive as we see it happen over and over and over again for those that have not planned for this and have a plan in place. So at this point, I want to see if we've got any questions. Okay, there's a question here that apparently coverage takes into consideration for pre-existing conditions. Yes, it does. But I will tell you, do not be dismayed by that, because we get lots of people insured that have pre-existing conditions. There are certain conditions that we're not able to get people insured for. Maybe if somebody has Parkinson's or has Alzheimer's presently, they're not going to get traditional long-term care insurance. Now, there may be some other options that we might be able to help them with that would provide a source of funding for that. So I always tell people not to assume because they have medical conditions that they can't get long-term care insurance, because really at the age that most people are when they're looking at this, we all have something going on with us. But we've insured people that have had prostate cancer and recovered from it, heart bypass surgery and recovered from it, different types of cancers, high blood pressure, TIAs, a lot of different conditions, diabetes, if it's controlled, with medication, whether it be insulin or oral medication, depending on, how favorably someone's control is. So things like that we are able to get people long-term care insurance for many times. So if you have pre-existing conditions, in my opinion, that's even more of a reason to research this and find out if you can get long-term care insurance and what might be available to you. And having done this for 20 years, I typically don't tell people when they call me and they give me their medical history, oh, you can't get it. I still go to the carriers because their guidelines are changing all the time. And far be it from me to tell somebody that, I don't think you can get long-term care insurance until I've talked to the carriers and they've come back and said this person does not meet our guidelines. And, if we go to 6 or 8 of them, sometimes we have 1 or 2 that will consider them when the others won't. But yes, medical insurability and pre-existing conditions will be taken into consideration, but we will still research that for each person. Okay, here's another question. Will enlarged prostate keep someone from getting long-term care insurance? No, generally it does not. I mean, even people that have had prostate cancer and that have been treated for it, if it's been treated successfully and their PSA is down low again, we get people insured with prostate cancer, routinely. So having an enlarged prostate is not a deal killer for getting long-term care insurance. In fact, many people do have enlarged prostate. See, there are so many myths out there and misinformation. Here's somebody, I've heard that you cannot purchase this after you're 65. Is that true? Absolutely not. We can get insurance up to age 80 with some companies, you know, and there's just so much misinformation out there, and a lot of it comes from people that don't really know long-term care insurance. You know, insurance agents that are well-meaning, that are licensed for lots of things. They might have a license where they could sell long-term care insurance, but they don't specialize in it, and so they don't really know. But no, you can certainly get long-term care after 65. In fact, I'm working with a client just presented yesterday options for he and his wife. He's 68 and she's 65 or 66. So yeah, absolutely you can. Here's another question. When you're healthy and applying, how can you shop carriers because you don't know what afflictions you'll have in the future? Well, they don't really take into account afflictions that you have in the future. That's not held against you. They're only concerned with what afflictions a person might have now when they're applying for insurance. So if you're healthy now and you're applying, you don't have to worry about that because you're going to be, you know, every company's going to be interested in you. So we would shop the market and look at all the carriers because we should have all the choices available since you're in good health. And then you can make a decision as to which company you want based on, you know, their pricing and the benefits in the plan and things that we would explain and help you understand. But yeah, they can't change the policy because of afflictions that you suffer in the future. They can never cancel the plan unless you don't pay your premium, but as long as you pay your premium, and they even give you a grace period to do that, they can never cancel the plan, and they can never change the provisions of the plan. So they can't say down the road, oh, well, these plans are a little broader than I'm comfortable with now, we're going to add a restriction to it. They cannot do it. They could change it for new people buying it, you know, that don't have a plan with them yet, but they can't change it for someone that's already owned it. And that's why it's also very important to get this coverage, you know, sooner versus later, because these plans are becoming more restrictive as we go forward, not more liberal. And that's due to how many people are having claims and needing to use these plans and how long the claims are lasting. Okay, here's another question. Can you give me a range of the average premium monthly or annual for two different types of long-term care? Well, I can do that individually, but I can't do that without knowing somebody's age and their health and their smoking status and their marital status, and basically a handful of questions that we have to know to be able to do that. And then the range really is all over the map because it's kind of like somebody saying, can you tell me how much a car costs? You know, well, it would depend on what kind of car is it. Is it a Hyundai, or is it a Mercedes, or is it, you know, an Oldsmobile? What year are we talking about? What options and features? And that's why it really takes us communicating with the member individually to get your personal data, so then we can show you what's available and what the premium ranges are, because it's going to vary all over the map depending on what you want. I mentioned earlier a doctor the other day wanted $10,000 a month of coverage on he and his wife. Well, that's a very high-end plan. I have other people that can only want or afford $3,000 a month. So the premiums are going to range all over the map. But what I will tell you is generally you can get the budget. We can get the premium to fit within each person's budget based on what they're comfortable spending and what they can comfortably afford by tweaking the benefits and scaling them down, the amount of coverage per month or how long the benefits last. There's a number of things that we can do to massage the numbers to get so that somebody can have some coverage. And I'm a huge believer that some coverage is a whole lot better than not having any coverage. There's a question here, can family members be covered under my policy? With certain companies you can. Spouses can be, and in some cases other family members can be that are related to you. It just depends on the type of policy, the carrier, but again, we look at all those things individually. It's just kind of hard to give a blanket answer because with some companies the answer would be yes, with other companies the answer is no, but it certainly can be done. Is there typically an age range that you recommend individuals to get long-term care? Well, you know, I'm very biased on this because I'm in this field. This is all I do, and I see what happens. I bought my policy when I was 39 years old. Now, most people aren't going to buy long-term care insurance when they're 39 because they're raising families, they're, you know, trying to save for college education, retirement. They've got a lot of other priorities that in most cases for a 39-year-old, long-term care would not be on the top of that list of priorities, and I recognize that and I understand that. But being in the business and seeing what happens to people that don't have it, and knowing friends that got MS in their 30s and could never buy long-term care, again, this is all about protecting yourself and leaving your options open. So my answer to that typically is the current age that you are, because you'll never be in better health for most people. You'll never be any younger than you are now, so the premiums will never be any lower, and the premiums in the industry are only trending upwards, so the premiums generally as a whole are never going to be any less. So the best time when people ask me that question to buy long-term care insurance, I tell them is the age that you currently are for those reasons. Now, there are some exceptions to that where maybe the person's 29 years old and it probably doesn't make sense for them to buy long-term care insurance right now. But even then, I'm careful when I say that, because I've said that one time years ago to someone, and she said, well, why not? She said, I've lived with this. I had a brother that was a paraplegic in an accident. We've lived with this for the last 20 years and seen how it's devastated our family. And I said, well, that's a very good point. In your case, it might make a lot of sense for you to look at getting long-term care insurance now. But as a general rule, I would say certainly once somebody hits their 50s, as soon as you turn 50, that's the best age to start looking at it. But I have people, like I say, a member yesterday, 68 years old, just didn't get around to it until now. And it certainly makes sense for them to have long-term care insurance now if we can get it for them, which in their case I think we can because of their health, at 68. So, that's the best way I can answer that. Do you have to have a physical? This is the last one I'm going to answer for y'all because we said we try to keep this to 45 minutes and we're right at 45 now. Do you have to have a physical to apply for this type of coverage? It depends on the carrier. Some companies require it now. None of them used to. They all, not all of them, but some of them do now. Some do depending on the level of coverage you're applying for. Some companies just do a telephone interview and write and get your medical records, but you certainly have to answer medical questions on the application, and then they'll either do a telephone interview generally or have a physical exam done where someone comes to you and does that at your convenience, and there's no cost to you for that. And then they'll write to doctors that they want to get medical records on for any pre-existing conditions that they feel are significant that they need to know about. So that's generally how the underwriting works. But again, the biggest thing I want to tell you is if you got pre-existing conditions, I wouldn't shy away from researching this. For me, I would run toward researching it because your need for care is going to be greater potentially than somebody that doesn't have any pre-existing conditions. And too many times people mistakenly assume they can't get it. I'll tell you one story. Again, because we specialize in this, we know the carriers and we know how to get things done a lot of times that other people can't get done, just being quite frank with you. And I'll give you a case in point. Just had a client that I helped get insurance recently, and this client had been turned down. The wife had been turned down with another company about 3 or 4 years ago. She really didn't want to apply for insurance because she knew she was going to get turned down. Well, I helped her brother and his wife with insurance. They were really pleased with how it went, and so they told her, you need to talk to this guy. Well, I talked to her, and she said, well, I know I can't get it. I got turned down 2 or 3 years ago, and here's my history. I mean, really negative all the way through, and I understand it because she's been turned down, and she didn't really want to go through this and get turned down again. So I took down her information. I didn't make her any promises. I said, let me check on this because I said, based on what you're telling me, I think we ought to be able to get insurance for you. So I need to research this with the carriers. They came back. They told me they thought they would do it. Well, she and her husband had quite a bit of assets, so they wanted to go with one of these hybrid plans where they knew they were going to get their money back one way or the other, and their premium could never change. We applied for it. All through the application process, she said, well, I know we're kind of wasting our time because I know I'm not going to get approved for this. Well, I knew she probably was going to get approved for it from experience and from the research I had done, but no matter how much I tried to tell her, she was sure she wasn't. So I just said, well, let's see. I think there's a good chance you can get it, but let's see. Sure enough, she got approved for the coverage, and now she's elated. She's, just told, several of her family members, you guys need to get this kind of insurance. So my point is, don't assume, please, that you can't get it. Let us do the research for you, because the only people's time it's going to take is ours, not much of yours, and you might be pleasantly surprised and find out that you can get the insurance. Not everybody can, but a lot of people can. So we'll be happy to do that research for you. Okay, I want to remind you one more time, for those of you that would like to have this research and have us research it for you individually, we'll do exactly as I explained earlier on in the call. We'll be happy to do that. Just go to that link, either type that website in that you see on this screen that's in front of you now, or as soon as you get the link, just click on the link because you're going to be emailed and it'll have a link in there. Complete that little form. It'll be sent to us, and I will contact each of you individually and help you research it, and then you can make informed decisions about if this is something that makes sense for your situation or not. And that's what our goal is, just to help the members get educated so you can make good decisions while you have options in advance of something happening, meaning needing care, so that you can plan for this if that's something that's important to you. So thank you all very much for your time today. We appreciate it.